Okay, so today we are covering direction. There's a pretty good example like earlier today with gold was pretty bearish most of, or the first half of today. And I took buys, bit of counter trend buys, some other people took buys, and you weren't wrong to take buys. There's just a little things, certain time frames, certain factors affecting why overall I only had small scalps, very small scalps, like counter trend, and I wasn't holding very long, so very small. This is just to create that 4 hourly top wick, because that hourly 4 hour, if you're going to look for it to create that top wick first, it's going to be in the first half of that candle. So even though it closes bearish, you're looking for it to create that top wick in the first half. And you can use that exact same concept to find direction on today's overall movements. So we're going to kind of start off with this. Okay. There is no certainty in trading. There's no certainty in direction. It's very easy to find an area of interest. You might just go for a high or a low, a level. It's very easy to find a shift of structure. A shift is just you have higher highs, and then you might have a new high, and then you might break a low, come back into retest. It's pretty simple. But for direction, unfortunately, it's very rare that you have a clean directional market where you're making lower highs and lower lows. This is very rare. This would be like maybe 20, 30% of the time at most. And it's always finite, it never lasts forever. So direction is difficult. Are you bearish? Are you bullish? It can also be ranging. That's still a direction. You're just going sideways. So identifying what kind of direction or what market conditions are at that point in time is really important on getting that entry or identifying which area of interest to take if you're waiting for a shift. Yeah, so because a lot of times you might have a shift low where you might have something like this, where you have it make a new low, break a high here, then break a high, and like you're looking for a buy for it to continue, but then it does something like that, and you have that shift bearish, which will happen today. This is where kind of it's important to get that direction. Okay. So the reason it's so much harder to find direction versus an entry model or an area of interest is because there's so many different factors that you have to keep in mind. There's tens of or 20 little things that you have to keep check of, keep aware of. It's almost impossible for you to actively, consciously keep that all in mind. So how do I sort or fix that? This is where your intuition comes in. Very rarely am I making a pros and cons of sort of writing everything down, thinking about all these different factors. Very rarely am I doing that. If you are actively thinking about all these different things, a lot of the time you're forcing a trade when you should just be taking simple trades, easy trades, trades when there's clear direction. That means you just won't be taking a trade every day. But that's the easiest way to be profitable. You just take clear, simple trades where there's a clear direction. But that would be perfect, but unfortunately that's not reality. We do want to have enough frequency of trades to be trading most days, not every day, but so unfortunately, like this is where nothing beats experience. You failing to, or you taking the wrong side of the direction early today, if you were to take this buy here of the shift, where it's not a bad trade. It's a good trade. That shift here, you had like previous lows around here, but taking that shift, that's not a bad trade. You waited for 11 a.m. the second hour of Asia to take that. You had a 30-minute close in your direction, but you take that loss. This is right. Like some days this trade might win. You might have it a bit push up. Some days it won't. This is why it's always going to be probabilities. You can take good trades and still lose. You sticking to this plan, the system, step by step. You taking this trade, it fits everything correctly, but you still lose. That's just trading. There's always going to be uncertainty. It's always going to be based off probabilities. For me, I took those two little buys here. Why did I exit there? Why was they little scalps? That was purely intuition. I can't put into words why I exited right here at the very top. Got probably a bit of luck, but I listened to how I was feeling. So direction will always be somewhat confusing to you because you think if you read a book, if you watch YouTube videos, you'll be able to understand price action better. I keep saying this. The only way to master trading or master price action to like avoid trades like this, where it's mechanically a good trade but subjectively a bad trade, is through experience, intuition, building that intuition. So this is why I say like there's no good or bad outcomes. It's just this is a learning that you can use to improve if you journal it and if you still stuck to your plan. But okay. So direction is all about giving context. It's all about confluence. There's the idea of confluence. These are all kind of confluences or probabilities. Think of every trade you take, you're flipping a coin. So I was just taking like a small counter trend move. DXY predominantly. So it's mainly based off DXY. I should just cover that trade before I do that. Okay. This was at 1042. You see this move down here? 1042. Yeah. So this push down on DXY, this bearish candle here. I was taking a buy like around here. So took a buy here with that bearish candle here on DXY. So you had a break of the low here, broke this low again, came back into, kind of respected that, and then when you had this high volume candle come in here, break this low here, that's when I took that buy on gold. Mainly just based off DXY, because it's kind of looking bearish. So there's a small little scalp, even though DXY was looking, even though gold overall was looking bearish. That's kind of why. Yeah. Yeah. So when like overall you're moving like bearish on DXY and like bearish on gold at the same time. Do this. Okay. You can still find like even though overall like the overall structure they're both moving bearish, you'll still find when what time am I looking at here? Okay. You'll still find little things. So if you have like a respect of like this, like even though this whole structure is looking bearish, you still have it maybe respecting a low here, and then you have a break of a high here. So you have this high volume push up here, around here. When you have this bullish move, you also have this bearish move here. Like even though you have like a bit of a shift here, even though it's not looking the cleanest, you have a bit of a bullish move with that bearish move. And then you have a bit later on, you have this bearish move here. with some of this pullback here. There. So it's not going to be like perfectly correlated on like all structure, but there's still little things that you can look at for correlation. Yeah. All good. But yeah, so I'll cover a bit more on direction, but mainly you also had a high time frame like shift on DXY as well. So okay, I'll go zoom out a bit. Very nice. Yeah. So that was the previous day. Previous morning, you had this kind of like break of a low here, and then you had a push high, and you're in this kind of like pullback phase. So I was expecting like a bit of a move up, but okay. Going back to this. So there's so many different factors that can affect direction. Direction is kind of a culmination of all the different steps. So you can use this entry model to find direction. This can be on the high time frame, on the hourly, where you might be looking for an entry around here. You can use an area of interest to find direction. Think of like areas of interest, they're kind of like magnets. Price would be pushed away or drawn to them, bouncing in between them. But the most important thing for direction is getting in flow of the markets, recognizing that markets, they're a push and a pull. The more you push, the more likely you're going to have a pullback. It's a wrestle between buyers and sellers. So you have sellers in control, they get exhausted or they take profits. Then you have some buyers taking it into control. Bit of a and then they take some profits or they get exhausted from buying. And then you have the sellers take control. It's always going to be a wrestle between buyers and sellers. It's always going to be a push and a pull. When you have a big push up, more often than not, you're going to have a big push down. Smart money concepts, they would say that's inefficiency, all that sort of stuff. It's just, yeah, it goes up, and likely it will go down. It likes to fill its moves. I kind of give out the stat. Most of the time, 70% of the time, it'll fill a move in a day. 70% of the time that it doesn't do that, it'll fill the same move in a week. So exceedingly rare that it doesn't fill a move. You have a big push up, you have a push down. Even with that push down, you're going to fill that move in. And that's going to be filled. You can go, it's all fractal as well. So push and a pull, and then you're kind of like looking at where that is on high time frame for that push and pull, but also on lower time frame. So if you're scalping like me, the low time frames have more weight. You want to be entering like with low time frame volume, low time frame direction. So you might be, let's just say, okay, structure might be really bullish, really clean bullish here. Let's just say you get like a little shift here and you take a buy. But if you zoom out to high time frames, this bullish move here was a part of a larger bearish move here, and you're trying to take a buy into a previous low on a high time frame. Just as a very simple example, that's where direction would kind of mess with you, and it might not go as far as you think, or you might just turn into a loss. It might just go straight bearish here. So always taking in mind higher time frame structure and counter behavior. It's a really complex thing, direction. Just the easiest way, I'm going to go through like a lot of information, but the easiest way is just to take lots of trades. It's just to see maybe why it was in your favor, why it wasn't, journal it, learn from it, build that intuition, build that experience. I learned all this from taking losses. But okay. So context, tell a story. Think of price action as a story, a book. You're not looking for where price is going. It's all time based. You're not like thinking price is bullish. Okay. Is price bullish for the next day, the next hour, the next minute, next 5 minutes? It's always time based. You're not looking for if price is bullish, you're looking for if price is bullish for the next hour. How long do your trades normally last? Do they normally last around an hour or two? This is where like you need preparation. You need to know exactly how long your trades last. For me, it's around an hour, sometimes less. It can be 30 minutes. If I'm scalping, around 5 minutes, 10 minutes. So I can trade with direction and counter trend move if I'm just expecting direction to be in my favor for the next 5-10 minutes. So it's always going to be time based, where and when, and what happened previously. So keep in mind, price is a push and a pull. What happened? So today's Tuesday. What happened the previous day? Well, previously, I guess. You had this big push up here. In the later half of the day, around London, New York, you had this big push up. If you think about price, it's a push and a pull. You have a big push, likely you're going to have a pull. That's more structure-wise. Remember, if you've kind of went through any of the course modules, price action is broken down into two main things. You have candle behavior and market structure. These are kind of the same thing. You're just connecting time frames. Like you're looking at the same thing, you're just connecting different time frames together. The more detail you go, the more information you're going to have, the more it's going to be reliant on market structure. So what does that look in, like, what does it actually look like? I mainly look at, I don't know, the daily, 4 hour, sometimes maybe the hourly as well. Purely off of, it's more focused on candle behavior. How are individual candles forming? How did the previous candle close? Sometimes I also look at the weekly of that. But how did the previous candle close? Where are we in at this current candle? This daily candle here. Market structure wise, this is kind of mainly 1 minute, 5 minute. Maybe sometimes 15. But 15, like 30-minute hourly, it's kind of like middle time frame. But candle behavior, market structure. What is candle behavior? How a candle moves, so our life cycle of a candle. If you're moving bullish and you're expecting it to continue bullish, if you have a candle open, in the first half of that candle, you're looking for it to create a bottom wick first, and then looking for it to flip and continue bullish. So looking for it to open, create a bottom wick, fill in some of the previous move, and then flip and continue bullish. Market structure wise, what this would look like, you're making higher highs and higher lows. What is the anatomy of a candle? Each candle is so if this is a bullish candle, each candle is an open, it's a close, open, close, it's a high or a low. What this looks like, you could have so if the candle opens around here, you have a low here, and then a high with the close. So you kind of like open, close. Not a very strong candle, but you have lots of big wicks there. That's just the anatomy of a candle. So you're looking at the same thing here. You're just kind of looking at it through a different lens of candles and market structure. Each each of these individual candles, let's just say it's an hour. In the first 30 minutes, sometimes the first 15, sometimes the first 5, sometimes the first couple of minutes, you're looking for it to first create that bottom wick in the first half. In the second half, you're looking for it to flip and continue bullish. So maybe in the second 30 minutes, this is the 4 hourly, the first 2 hours, sometimes the first hour and the 4 hour. If it's the daily, first 12, the first 6, first 4, just the first half. It's a characteristic. You can use this daily for London as well. If you're trading London later in the day, if you have a previous candle close bullish and looking for sells in Asia to create that bottom wick, then you can then look for buys in London for it to flip, or maybe New York. There's a really good example today of that, but we'll go through that a bit later. So the whole point of candle behavior is just to make it easy to give timing to market structure. Market structure is just like basic direction. Like, where are you expecting price to go? Direction is like, it's not just a straight line, it's a push and a pull. Where are you expecting this push to happen? When are you expecting this pull to happen? And it's all fractal on different time frames. Makes it more complex. This is why direction is hard. You can take a good buy on this 1 minute time frame here, but if it's on a larger time frame bearish, maybe it's not as good. But you always want to keep in mind candle behavior and market structure across different time frames, taking into account larger time frame structure. And gonna get a bit more complicated again, but all this, how I do this on gold, I also do the exact same thing on all time frames on DXY. How do you keep in your head all these different little factors and things? I don't. I've done this for 4 years on gold. It's internalized. The more you repeat things, the more you practice things, the more they become internalized. This is why I say you can trade any way you want. But if you want a chance, you have to stick to one thing for an extended period of time. Your skill as a trader, your profitability comes from your intuition. Things you can't put into words. I've tried really hard to put them into words, but it'll always be limited. So practice, teaching others, taking trades, journaling, reviewing, all that builds your intuition, builds your skill, builds your profitability. So stick to one thing. So counter behavior, market structure. What does this look like in actual market conditions? Okay. So let's just start off the daily. Okay. If you were to look at the daily, it's relatively bearish. Overall structure wise, you've had a break of low, bit of a pullback, and then like an impulse down. But if we're just going to look at this one candle here, just this one candle, we can use that to find direction. So we had a pretty strong bullish close on this daily candle here. That means in that first half of that day, if we're looking for it to maybe fill in some of this move here, it's a push and a pull. Remember, it's a push and a pull. The bigger the push, the bigger the pull. And you have a bullish close candle here. So on that daily candle open, in the first half of the day, you're kind of looking for it to create a bottom wick, for it to fill in some of this bullish move, and then to flip to fill in some of this previous bearish move here. 4 hour wise, you have a larger time frame shift. It's such a big shift though. Like, you have such a big move down, like you're likely to feel some of that. Bit of a pullback phase at the moment, but remember, like, you're gonna have like a shift of that shift. It's fractal. you have this like bigger move down here. Might be a pullback, but on that pullback, you're going to have pushes and pulls, if that makes sense. So in the first half of the day, you're looking forward to create that bottom wick. There, you've had this like decent push up. Likely you're going to have a bit of a pullback and then a push up as well. So you're connecting that structure, connecting that counter behavior. And then you're looking for like areas of interest. What are some like basic areas of interest looking at? Like you have the daily. So you can call this like a daily type one. And it's like 4 hour. Okay. I think I went too far. Okay. So you have the 4 hour open for the day, hourly. You have a pretty big 4 hour close bearish. This is the Tokyo hour here, 10 a.m. Okay. So you have a 4 hour close bearish here. Likely you're looking for it to create that top wick and then push down. So you have this area of interest here. If you're going to look to react, you're looking for a reaction to this area of interest to this area of interest. So currently, daily, you're looking bearish to create that bottom wick. 4 hour, you have a bearish close. So below this low as well. So if you're kind of going down to the low structure, you have a break of this low. So you're looking bearish structure-wise. 30-minute, you have a close bullish. That's a con against you if you're looking for sells. 15-minute overall structure is looking, you're making lower highs and lower lows. So you're just looking to stack timeframes in your favor. Okay, so if I just go back, stack timeframes. You have daily, you're in the first half of the day, so it's looking bearish. You have this 4 hour close bearish here. You're looking for it to create that top wick, but overall it's looking bearish. You also had a break of this low here on that 4 hour. So counter behavior structure wise, it's looking kind of bearish. Hourly, you had an hourly close bearish. It was a pretty weak hourly close here, but it's still a close below structure. You're not really at a previous low, a previous area of interest for reaction to yet as well. So overall looking bearish. 30-minute wise, you have a bullish close. Maybe you might have like a type 1 reaction. Overall, you did like have a break of a low. So this time, like you're still overall kind of looking like you could be making high highs and high lows. So I'd say like that kind of structure wise, 30-minute wise, 30-minute structure. You're looking kind of, that's like a positive against you. It's not all time frames that are aligning. If I go down to the 15-minute, have a bit of that type 1 there, a bit of a pullback phase. On the 15-minute, if you just look at this structure here, you're making like lower highs and lower lows, lower highs and lower lows. So in that, like how in this previous 2-3 hours, you're moving bearish. So that I'd say is looking 15-minute wise, previous is looking bearish. 5-minute, you have a shift here. That's looking bullish. 5-minute, looking bullish. And the 1-minute, you have a shift. So you're looking bullish. If you were to like get all these things together, you have high time frame all looking bearish. You have, I don't know, larger time frame like this kind of overall move here, like 30-minute wise. You also have a 30-minute close bullish as well. 15-minute overall, like this previous structure here is looking bearish. 5-minute, you have that bit of a shift looking bullish. 1-minute, you have a bullish move here. So if you have like some high time frame candle closes and like low time frame is looking bullish. You also have that DXY looking bullish as well on the low time frame. This is an opportunity for a small little counter trend scalp. Overall direction is going to be moving against you, but first, if you've had a push down, you're going to have a pullback to create that 4-hourly top wick, that hourly top wick, and you have that 5-minute shift as well with that DXY. So it's always like a pros and cons of different multiple factors of different time frames. You just trying to look to stack time frames in your favor. If you're looking for a really high quality trade, you want more time frames than not to align. What does that look like? Okay, I'll get this up. Okay. So all time frames are aligning. 7 time frames are aligning. I don't lose on this yet. I haven't lost on this yet. Doesn't mean I won't, but this is probably the cleanest. When you have all time frames aligning here, 1 minute, 50 minute, 30, like all these different things, this is when like direction's clear. You have very clear direction. So it can be counter behavior, market structure. Purely like counter behavior wise, you have a really bearish close on that daily. It's a daily type 1. This was in London. So well, I'm always looking for that sell in that first half of the day if it's previous close bullish. Another example, if you've had a previous close bearish on the daily and you've moved bullish for the first half of the day, you've moved bullish for the first half of the day here, and then you're having a like another fractal, an hourly type 1 where you had a daily type 1, you're now having an hourly type 1. You also have a kind of a break and retest, a continuation. So I say like high time frame continuation, low time frame reversal sort of thing. And then you have the 30-minute continuation. Then you have like a 5-minute shift in entry model here. So when like every time frame is like looking clean, aligning, you have very clear structure. Like hourly structure is looking bearish. Hourly candle behavior, you have hourly candle close is also looking bearish. All these different things are affecting your trade. So like direction is really hard because you're trying to keep in mind all these different like factors, variables, context, where is the push and the pull, market structure, candle behavior, the time of the day. Did you move bullish for the first half of the day? How is the candle, previous candle close looking? Okay, is there an opportunity for it to then fill in some of that move or start moving in the opposite direction? So time of day is very important. Giving context to your trades, and keeping in mind high time frame, low time frame. Like if you struggle with like finding direction on a certain time frame, it's just like a you're trying too hard. You should just use the same counter behavior, market structure. You're looking at price differently, like exact same way on all different time frames. Price is fractal. You can't tell the difference between 1 minute or the daily if there weren't if they didn't have that daily level on it on that. That makes sense. But so if you're trying to keep in mind all these different things, a quick thing I kind of do sometimes is just make a mental pro and con list. There's no certainty in a trade. There's always going to be probabilities. How do you trade through the lens of a probabilistic mindset? Just make a mental pro and cons list. What I went through on that trade there, you had like daily looking overall good. You're in that first half of that day, creating that daily bottom wick in that first half. 4-hour close bearish, but you have like kind of like hourly 30-minute structure is looking bullish, but you have an hourly close bearish. So structure-wise, that would be like a con. It's looking bearish. You just want more confluences in the pro list and then in the cons list. there's always going to be reasons to take a sell. There's always going to be reasons to take a buy. What are you trying to do? You're just trying to stack more reasons here. The more of the in scenarios where there's like a massive amount in the pros list and not very much in the cons list, that's kind of when the best trades occur and when the direction is clearest. But that's always going to be also going to be rarer. And like this is why like you don't want to. I see a lot of people doing this. You don't want to overly focus just on like this shift here. You don't want to just focus on the entry model because you have to keep in mind like larger structure, larger time frames. Because you can have something like this where you have like that, but like if overall you have like that, like overall like larger time frame is looking bearish here, even though you have like a shift. This happens quite a lot around second half Asia. Even though you have that shift, a lot of the time you're just going to have something like this where it's either going to fail to break a high and then you're going to have something like that, or it's just going to go straight through. So you always want to keep in mind larger time frame structure. It's really difficult for me to explain direction because it's so subjective, it's so intuitive. And intuition is a feeling. It's not something that you can really put into words. But if you have any questions or want me to clarify any points, just focus on that counter behavior, that market structure, telling a story, giving context, focus on like lots of little things. And direction is not always going to be clear as well. I think that's if you're not sure about direction, or if you're struggling, if current price action is not clear, don't take a trade. Just wait. Like there's a lot of times where I'm not sure about direction. What do? I just don't take a trade. I wait and come back later. Okay. But yeah, counter behavior, market structure, DXY, all these little things you can help. Like all these little things, you're trying to stack them in your favor. Confluences. You want DXY to look in your favor. You want counter structure across different time frames look in your favor. You want market structure across different time frames to go in your favor. All these little things you're trying to stack. If more things are in your favor than not, take a trade. If it loses, journal it. Look at reasons why it was in your favor. Reasons why it maybe wasn't in your favor. Then you learn from that. That's how you improve. Over time, you'll do it so much that it'll be ingrained, and it'll be automatic. It'll be intuitive. Okay. Yeah. So you can trade range or tick charts. I don't personally trade them, but if you want to, just be consistent with it. I guarantee you'll probably be able to find patterns in that, or maybe it resonates with you more. You can trade like an infinite amount of ways. You can using an infinite amount of tools. You just want to be consistent and find something that resonates with you, that you're drawn to, and like it's maybe a bit enjoyable. For me, trading gold and DXY resonates really well with me. I find it really easy to scalp with gold and DXY. Like just looking like small little things. Like I found most of my direction for this like small little like counter trend move just off like this structure here. So I find that it really helps DXY with like small scalping wise. It's not always going to be perfect, but no confluence is going to give you 100% win rate. Yeah. So, okay. So I do know reversal wise, in pretty much in all the systems I've tested, going for reversals has a lower win rate because it's just harder. Um, okay, low time frame reversal. Okay, going for high time frame reversals, that's around a 57% win rate. I used to be really bad. So in the previous system, I'll just look at, is it either a continuation or is it a reversal? This was like ages ago. Continuations, that's a 58% win rate. This is like the previous system. This is when I wasn't even using type 3s or shifts. Reversals, that was a 40% win rate. So a lot lower. So continuations, always just focus on continuations. It's always going to be easier. Um, Low time frame reversals, like high, because low time frame reversals can be with like a high time frame continuation. A high time frame reversal is a bit lower win rates. Continuations, high time frame continuation is higher than a high time frame reversal. So going for continuations will always be kind of better because it's just easier. You're with high time frame. For me, like reversals, I sometimes get impatient, or I just see like it's very clear that there's like going to be a smaller move in my favor. But yeah, okay, DXY confluence. 53% win rate without DXY, and then a 73% win rate with DXY. So for some reason, I'm really good at DXY. That's kind of why I give it so much weight. You have all these little different things like you have market structure, you have counter behavior, you have like correlation of DXY. Really bad, but correlation of DXY, like there's kind of a lot of different things, like time of day. Um, Everything is like tracked in that journal here. You have like type ones, type twos. You have time frame types. Entry time frame. This is like, is there a counter close in your favor? Like counter behavior wise. Um, it's like type threes, type ones, and type twos. This is all like price action like that's been defined. A type one is just a counter close, like it's counter behavior. Type three is just market structure. You've clarified that. I've taken hundreds of trades. I've journaled them all. Tracked it. What affects or what positively affects my profitability the most in finding direction and finding everything. It's that DXY correlation. It's like market structure from a type 3 shift on the low time frame. So that type 3 shift is kind of like it's a reversal most of the time. Like 90% of the time, it'll just be a reversal. So low time frame reversals with a high time frame continuation. So like counter behavior wise, that high time frame continuation might be like a hourly, 4 hourly candle close, sometimes daily, depending on the time I'm trading. But yeah, that's why it's important to journal your trades. It's all good. So yeah, counter behavior, market structure, that push and that pull, keeping in mind that price is fractal, giving context, telling the story, what happened yesterday, all that sort of stuff. And then accepting that you will be confused and you will take losses and you won't be sure and you'll be wrong about direction. But those are all amazing opportunities to learn. Like, I'm still wrong about direction. Yeah. Yeah, no, you can hop in whenever. yeah. So you want it to, okay. Yeah, so like structure wise, you have, so I was entering a small scalp on gold when you had like this push bearish here. So you're around like you had this low here, but you're kind of looking for it to push down into like these lows here. You had a shift. So structure wise, yeah, you're looking for it to like continue that bearish move down. Um, you can like breaking lows. You you had a bit of a shift. So you made a high, broke a low, respected this high here, and then broke this low. So this is looking very bearish based off that. Um, if I'll just remove all this. If I was in a gold trade and let's say you had this like bearish move down here where I was entering that buy, you had something like that, I would look to aggressively manage my gold trade. Yeah. Um, if I don't have that DXY correlation, or if it's not clear, I won't take the trade. Yeah, all good. And you kind of just like direction on DXY is exact same as gold. Like it's not always going to be clear. It's never black and white. It's always going to be like percentage based. It can be like 70% bearish, like 30% bullish on certain time frames. It might be like certain that, but you also might have some indecision where it can be like some kind of messed up structure here. Like it's overall kind of bearish, but you have it being a bit more like range bound. You've had this big move down bearish, like you have a bit of a pullback there. So it's always going to be alternating between like bullish structure, bearish structure, and like range bound structure, indecision. You might have like the indecision at some like highs or lows, previous highs or lows. So it's like, and if you're not sure if to like this structure here is looking very bullish, but if you have like a range here, likely you can have a sell to like fill in some of this move here. So it's all keep in mind all this little different things. And yeah, like another example, if you're just to take this shift here, this would be a really nice like kind of clear shift. But why did it go straight through the high? If you just zoom out a bit, you have a larger time frame shift there. So always just remember to like zoom out a bit and keep that in mind, like where you are, when you are, and direction isn't. It's not bullish or bearish. It's are you looking bullish for the next 5 minutes, next 10 minutes, next hour? You can be bearish on high time frame. Um, it doesn't matter. Like if I'm scalping the 1 minute, uh, high time frame direction doesn't have to be like the daily direction doesn't have to be always be in my favor. Even like high time frames bullish, where are you in that high time frame bullish? If you're in the pullback to then like you need to go bearish first and then you go bullish, you can use that. So bit more nuance there. Okay, what do you do now? I've given a lot of information. It's probably very confusing. I'm trying to explain what is unexplainable, my intuition. But where do you go from here? What should you be doing for the rest of the week? How can you improve this and get better at direction? Well, you can make some notes. You probably forget half of it, but make some notes. What are you going to try to focus on improving at? It can be uh, trying to be more aware of that counter behavior, being more aware of that market structure, trying to get more in flow with that push and that pull. For me, this is a feeling. That push and that pull, that push and that pull. It's a feeling. Get in flow with the markets. Actionable steps. Make notes of this. The recording will be uploaded. Put it into a plan. make an actual step. So I'm going to try being more aware of previous moves and structure. I'm trying to be more aware of the daily candle behavior, or maybe this is 4 hour candle behavior. Be aware, more aware of market structure, all that sort of stuff. Time of day, tracking that time of day. Maybe being more aware of that larger time frame structure. And then you just try to put it into practice. It will be confusing. You will make mistakes, but the more you trade, the more you start to see little patterns in your own trading. Yeah. I think that's mainly the two main things. What's the main things? I think if you just were to focus on like three main things, it's just like that push pull kind of behavior and market structure. They're kind of all very similar. And then maybe using that mental pro and cons list. Every trade you take, journal why direction was in your favor and then why it wasn't in your favor. Do that for 10, 20, 30, 40, 50 trades. You review that, you'll find patterns. Maybe, like, for me, if DXY was against me, I lost more often, direction-wise. So I changed my plan to focus more on DXY for finding direction. More for having that shift, or that it can be a low time frame reversal, but it has to be a high time frame continuation. That's kind of structure wise, but you'll be able to find what is most important in your trading just through that journaling, that practice, and then post it. The whole point of this community is like group discussion. Post your trades in the chat, get feedback, give feedback, teach others. If you just focus on all these different things, like if you just were to like listen to this lecture or like all this sort of stuff, demonstration, if you were to just do this, you wouldn't really learn very much. This is why like YouTube is good for like, I don't know, getting lots of information, but you're not really learning. You're just getting more information. Put it into practice, active learning, group discussion, take trades, fail, quickly learn, improve. You can only learn through your mistakes and teach others. Like, I'm going to keep on reiterating this. I learned more in the past 6 months than I have in my first 2 to 3 years, just from teaching others. If you're not sure what you should be doing, or if you lack clarity in your own trading, or if you're not sure what mistakes you're making, try to teach it to someone else. Because you're trying to convey what you're trying to do. It's an amazing way to improve. The quickest way, just to teach others. So, this whole kind of point of this. And yeah, on Friday I will be going through doing some journal reviews. So if you want your journal reviewed, put it in the chat. I'll get them all together to go over on Friday. But best of luck for the upcoming week. Price action has been pretty good the last week. This week has been pretty good. And yeah, remember, losses are a good thing. It's always a really good opportunity to learn. That's just, you focus on learning, you're not focused on winning. Profit becomes like you'll become profitable. It'll be inevitable if you just keep focused on learning and be patient as well. But yeah, also updated the mind map. If you have any questions, quickly let me know. But so breaker structure shift on the 1 minute. Most of the time, yeah, if you have like a shift, I'd say like if you want added confirmation, wait for a candle close, because a lot of the time that pullback will happen on that new candle being formed to create that wick. If you're really like, if you have high confidence in that trade already, you can take it just off that shift. So you don't always have to have the most confirmation as possible. You can have, like, depends on how much confidence you have. Stack probabilities in your favor. But most of the time, it's just better to wait for added confirmation. But you can journal that. Um, Journal that. Like, did you wait for the candle to close? Did you not? How does it affect your trading? To what extent? You might be better at waiting for the close, or might be worse. It's very subjective. But yeah. Um, Yeah, a lot of time you have like stuff like this. This is kind of like more range bound. You have a shift like here. You have make a high, make a new high, break a low, then you break that high here. And it's kind of like rangy. Um, Overall structure moving bullish, but there's so many different things that go into direction that it takes a lot of time. It's always going to be the hardest part, uh, and it's okay to be wrong as well. But yeah, and yeah, like yeah, how are you feeling about trades is so important as well, using that intuition. But yeah, the course module as well is going to be revamped. I'm going to make it a bit more clear. It's just a culmination of like calls of different subjects. So I'm going to make it clear step by step. Like start here, foundation, technical analysis, risk management, psychology, then scaling up. It's kind of just based off this. You have the first kind of part of your trading. You have technical analysis, risk management, and then like experimentation, finding a system that works. It can be mine. It can be a mixture between your own. You can like adapt it to how you want to trade. But start off more mechanical. As you get more experience, you build that intuition. And then like once you have found something that works objectively, that's when like psychology comes into play. And how do you scale up, increase risk, and all that sort of stuff. But coming soon, going to be a lot more clear, a lot more structured, all that sort of stuff. Yeah. I've been more high frequency scalping. So less of the normal type 3 shifts. Like okay. So this wasn't really a shift. You had a bit of a shift, but that buy there. Um, I'll be kind of experimenting with different types of styles of trading, but like higher frequency, small time frame scalping. So like counter trends, you can do that. Um, but yeah, so I haven't really been updating that journal as much because you get to a point where you start off broad, but you refine so much. Where like I used to trade UJ and gold, and like 1 to 2 sessions, 1 to 2 types of strategies. But now I'm like only trading gold with like DXY at like a certain time. So there's like there's almost there's less like there's the marginal returns on like me like further refining. It's just gonna make it worse. So like journaling refining, it's just so you find something that works mechanically, objectively. When you find something that works, it's now refining it into like as simple as a thing as possible, and then once you have that, now you start to build up that intuition. You're gonna focus more on that intuition. I have like 4 years of experience. I focus more on experience on that intuition. So I'm not journaling as much. If I'm taking like a classic like direction area of interest shift, I might journal that. But if I'm like high frequency scalping with like different positions, it's kind of like it's more intuitive here. But I'll update the journal as well with some new trades that fit the system. Me putting in my intuitive trades based off my gut feeling won't be that helpful, but um, yeah, I'll put in some more new trades. Yeah, that first buy isn't bad. You had like a break of low, break of a high. Order structure was bullish. But yeah, keep in mind, so like you had this big push up here. Like, so it's going to be like a push and a pull. When you have a big push up, 70% of the time, you're going to have like a correction to that. And I think 30-minute wise. You also had like a 30-minute close bearish. DXY is also looking pretty bullish. So that's probably why it started moving bearish. You had a big previous move up, you had the 30-minute candle close, and you had that DXY moving bullish. Like reasons for why that happened. But that second sell, that sell was pretty good. You had a break of that low, taking that sell, stop above the high. Very nice. Yeah. Yeah, there will be periods where DXY gold is tough. It wasn't the clearest today. It's just like getting that experience, all that sort of stuff. But yeah. So yeah, hopefully this helps the direction. If like its direction is always going to be the hardest thing, but keep in mind candle structure, counter behavior, market structure, that push and that pull. This is like a pretty good example of that on like all time frames. Fractional price. If you have those three things, if you just journal it, look to improve and make mistakes, that's all good. But yeah, I hope you guys have a good rest of the week. Keep focused on the process, improving, and I'll catch you guys on Friday for that journal review. But yeah, best of luck. See ya.